10 o'clock, and welcome to the February 10th, 2020 Oklahoma City Post-Employment Benefits Trust. We'll call this meeting to order. Item 2, we need to approve the minutes for the November 18th, 2019 meeting.
Move it.
Second. Any discussion? All in favor, say aye.
Aye. Motion
carries. Item 3, we need to receive the monthly flash reports as of November 30th, 2019, December 31, 2019, and January 31st, 2020. Doug Anderson is here with INCO.
Good morning and thank you. A little bit of a Monday right there, just happened. Taking a look at the flash reports here, I think that the most important one will be the December 31st flash report, so if we could turn to that one, that would be great. And I want to start with the market environment on this page, the chart-filled page here. Looking at the return on the upper right-hand side, blue being the Russell 1000, that's large cap U.S. equities. Russell 2000 being the next line there. You can see international equities. And just see how strong those results were. We did have a few down negative periods during the year, but all in all, when you follow the table out to the right-hand side, the Russell 1000 was up over 31% for the year. That's fantastic. That is an amazing rate of return, especially thinking about everything that we endured during the year. Brexit, trade war with China, political theater in the United States, European Union issues, slowdowns in China, et cetera. So that was an incredible rate of return. Not only were large cap stocks up, small caps were up 25.5%. So what we're seeing there is a lot of the market really favoring technology, big technology companies, especially in the United States. And if you compare our results at 31.4% for the year compared to the MSCI ACWI, so that's the International All-Country Equity Index at 21.5%, the biggest difference there is that the rest of the world doesn't have large technology companies like the United States. They do not have Apple. They do not have Amazon. They do not have Netflix. They do not have what used to be called Google. We have those, and they do not. We look down below that. Fixed income, in relative terms, up 8.72%. Fantastic rate of return, especially given where yields are. The 30-year Treasury is right around 2% right now. So when we have a bond market returning almost 8.75% when the starting yield on the 30-year Treasury is 2, means that interest rates also moved lower, meaning prices went higher. And it was not just Treasury bonds, it was also corporate bonds. Did very, very well. Mortgages were the underperformer of the three, but all parts of that market. And when we look at the Barclays global aggregate, so this is non-U.S. fixed income, that was up pretty decent as well. But remember, the biggest difference that you will ever note between a U.S.-based bond index and a global bond index, in my experience, will be currency moves. So when the global bond index has a lower return than ours, that means that the dollar was strong throughout the year, although it did weaken towards the end of the year. And then looking at performance on the next page, you can see this is an interesting chart here where we start with the beginning market value in October of 2009. And if you can remember what it was like in October of 2009, it was not a great period to be an investor because of all the uncertainty, the great financial crisis. So the beginning market value, the initial funding was a little bit more than $6 million. Now the next row, the figures as we go from left to right are fairly astonishing. Contributions, that means money coming in, $70 million over that period of time. Significant sum of money. Withdrawals, however, were $32 million. So almost half of what went in came out over that period of time too, which is not surprising given the structure of an Opebt trust. We have had gains, meaning improvements or increases in market value of assets owned, of $24.6 million over that period of time. So if we take our beginning market value, we've had 4x investment gains of the original allocation to the trust. Ending market value is $68 million, meaning a total return here of 113% over that period of time. So if we go back to that original period of time and thinking about what the market looked like, remember it was the dark, dark days where we didn't know what was going to happen, but in some sense, sometimes those dark days set up very substantial returns going forward if you have the patience and discipline to see right around the curve. Income over the period of time, this is just cash income being paid off of the investments at 6.4, almost $6.5 million, meaning the income generated by this portfolio has been 107% of the initial market value, which is tremendous. And this is really what we want to see going forward, throwing off large amounts of capital appreciation, but also income as well. Now, the following page is the asset allocation and performance summary. This is as of the end of the year, December 31st. This is net of investment fees. And if you look at the rates of return here, the total fund composite had an ending market value of $68 million. For the month, it was up 1.9%. For the quarter, it was up 5.72%. However, for the year, the 1 year period of time, is up 22.25%, which is an amazing rate of return on this amount of assets. For the 3 years, up 10.59%, and for the 5 years, up 7.37%. If you look at this in relative terms or relative to other funds like yourselves, you will see that the results are in the top quartile over all of these periods. Our asset allocation index is very aggressive because we know that this is a long-term proposition, and we take more equity risks than some other folks out there. Looking down the list here, the individual managers, let's concentrate on the quarter and the year-to-date lines. Year-to-date and 1 year are the same. For Loomis sales bonds, 2.43% for the quarter and 11.7% for the year, outperformed its benchmark by almost 3%. This is the type of performance that Loomis Sales is capable of. They don't always return this well, but that's an astonishing rate of return. And they do that through corporate bond selection and other risk-on parts of the portfolio. Double-line bond, this is a more cautious bond portfolio, and you'll see that its returns have been closer to its benchmark over its history, and that's what we should expect over the year. 8.09 versus 8.72, again, net of fees. So they did underperform, but if you look at the 3 and 5 year results, both of those are quite strong versus the benchmark. And we look at our high-yield bond portfolio managed by Lord Abbott. Again, this is junk bonds, below investment grade, additional risk. It's a hybrid asset. It has part of the returns of equity, part of the returns of bonds. But over the year-to-date period, it was up 15.2 and outperformed the benchmark. So two of our three, I'll say, core-ish and high-yield bond portfolios outperformed for the year and by a pretty substantial amount. But then we go down to Hoisington. Again, this is our duration-managed portfolio. It's a hedge to equity market volatility. And what we see here is a highly unusual result for them. Equity markets were up substantially at the same time as Treasury bond yields moved lower throughout the year. So this portfolio, which holds exclusively, at this time, 30-year Treasury bonds, the risk-free asset of the world, was up 17.25%. And there was zero trading activity in this portfolio. Talking with Hoisington, remember they take their cue from what they expect inflation to do. Inflation goes higher, interest rates go higher, that means bond prices go lower. Right now, they expect bond prices to stay where they are, if not go higher. So they're expecting interest rates to stay where they are or go lower from this. And we saw a little bit last week where the 30-year Treasury briefly dipped below 2% again. But it's been a lot of time in August and September below 2%, which is, in my mind, in my observation set, since I've been looking at interest rates, a 30-year Treasury yielding below 2% is a fairly unusual item. And if you go back even over long periods of time, it's still fairly low over the course of history. And again, the 30-year Treasury or Treasury bonds themselves are the risk-free asset of the world, not just the United States, but the world. In talking with Hoisington even this morning about what's going on in the world, their notion is that when you have China, unfortunately, having to lock down almost 500 million people, that takes a lot of impetus of growth out of the economy and also takes inflation. Also saying that China is consuming right now about 3 million fewer barrels of oil per day because of the lockdown within their economy over there. So that's additional downward pressure or support for the thesis that they have, which is economic growth is modest going forward. Another thing that they said, talking about, is the issue with Boeing is having about a 0.5% reduction to U.S. GDP because it's such a gigantic company, because the orders that they fulfill are so large. But the complete grounding of the 737 MAX and other issues that they're having should decrease U.S. GDP by 0.5% this year. The China issue should reduce global GDP by about 0.5% this year as it stands right now. Could be better, could be worse. So going down from there, those are the bond portfolios. Going through our equity portfolios, the Vanguard 500 index tracked the benchmark very adequately, up 31.3 or 0.4%. Vanguard mid-cap index up 30.9%. Again, very close tracking there. And remember that the mid-cap index is going to have a little bit more tracking error than the S&P 500 because of the nature of how it's calculated. Hotchkiss and Wiley. This is the one that's been on alert for some time, and it's a portfolio of deep value stocks, so they're buying what the rest of the world does not like right now. And in a market environment like we've seen that's been so momentum-oriented, meaning the biggest stocks out there are doing the best, the most growth-oriented stocks are doing the best, this portfolio has definitely struggled, but you can see that over the month and the quarter, it's starting to show some life there. Again, our discipline here is to hold assets that perform in different phases to one another. If there's not an asset class here that's underperforming the others, I think that we're probably too focused on what's hot right now. And so I'm comfortable with this type of allocation. You'll see our small cap allocation did better for the year, but it is trailing off a little bit for recent periods of time. And finally, our international equity assets started to perform. If you look for the quarter return, they're the top performer at 11.3%. Causeway is, I will say, a Eurocentric manager almost. They do focus more on Europe than they do China, Japan, et cetera. And they focus mainly on developed markets. So when you saw Brexit finally come to an end, saw some visibility there, some of the positions of the portfolio did start to stabilize. So all in all, it's really hard for me to argue with the return that's 22 and 0.25%. Hang on. I don't think that we should be projecting this type of return into the future. This is not a once-in-a-lifetime result, but it is very, very rare to see all parts of the portfolio perform this well. I mean, just going down the year-to-date figure here, I see 2 allocations above 30%. That's not something that you'll see each and every year, although it sure would be nice if it could. Going forward, we need to think about discipline. We've been allocating into the portfolio, and we're putting everything back to target. We're not letting the portfolio run. If you think about it, when we're allocating to when we have new money going in or we have money coming out, we're going to be giving it to the most underweight asset according to our long-term target. And if we're taking money out, we're going to be taking it from the overweight positions. All that does is it gives you a way to realize profits or invest in cheaper assets without having to make any type of forecast. And that's good long-term discipline. So with that, the January 31 report, briefly, you can see assets at 68. The monthly return was a perfect 0.00. After last year, it's probably worth thinking about a pause here, but even for the quarter and the trailing one-year results are strong. And I'm happy to take questions.
Any questions? All right. Thank you, Doug.
Thank you.
So we need a motion to receive. I need a motion to receive the reports. Any discussion? All in favor say aye. Any opposed? Motion carries. Now we're on the item 5, discussion, and I believe on item 5, discussion to consider approval and additional asset allocation or changes. There's no action needed. I've been advised by staff, so there'll be no action on that item. Item 6 is a joint resolution authorizing an agreement with United Healthcare of Oklahoma, the Oklahoma City Municipal Facilities Authority, and the Oklahoma City Post-Employment Benefits Trust as public entities contracting with United Healthcare on behalf of the city to provide major medical health maintenance organization plan for eligible employees and retirees. This was approved by the City Council back on December 3rd. It's for effective January 1 of 2020 through the end of this year for a total cost, estimated cost of $61.594 million. Of that, I've been advised $6.79 million of that would be to Opebt. So Chris Short is here to give us a presentation.
Good morning.
Actually on this one and all 4 items that we have here.
Yes, sir. 4 items for your consideration this morning. 3 of them are our routine renewals that we do with our healthcare providers. United Healthcare, this one that we just talked through to provide our Medicare Advantage plan as well as our HMO. We also have Blue Cross Blue Shield, who provides our indemnity plan. Blue Cross Blue Shield again for our dental. And then the 4th item is an item I'm very pleased to have in front of you today, and that's the administrative services agreement with our new clinic provider. And last year, we had committed to coming back with a bit of an overview to the process. And so with that, I'll introduce in just one second our benefits specialist, but I would like to point out one mistake I made on the 4th item, which is the clinic item. We had the estimated cost there at $1.3 million, and that is the total contract amount. Opeb's portion of that, based on our estimates, is right at $350,000. And I apologize, typically we would call that out separately, but that is the number. And then with that, I will introduce Jason Long. He's our benefits specialist. He'll go through the presentation with you, and then I'll return to answer any questions you might have.
Good morning, everybody. I have a few slides this morning to go over the 2020 overview of our benefits. As far as the update and rates for 2020, the cost share on a medical remains the same. It's 50% city contribution and city 50% retiree contribution. We did have no rate increases for Blue Cross Blue Shield medical and dental for 2020. UHC HMO medical, we did see a 4.3% increase, which is typically under health inflation of 7 to 8% that we see on a yearly basis, so that's a pretty good number. MAPD is a 3% increase, and most of that increase is due to the reinstatement of the ACA Insurer fee for 2020. This is going to be the 3rd year that we have the MAPD plan in place, and over the course of those 3 years, our rates have stayed relatively flat as far as that program is concerned, and that's been a really good.
Jason,
yes.
What does MAPD mean?
It's Medicare Advantage Plan.
Okay.
And that's through United Healthcare. And then as far as vision and retiree life, there are no changes to those benefit programs. Vision is a retiree paid benefit as well as the $10,000 retiree life plan.
Jason, can I have
yes.
The reinstatement of the Affordable Care Act insurer fee?
Yes.
What was that? What was
The Affordable Care Act mandates that insurers provide funding for the state or federal-run individual plans, the exchanges. And what they've done is on a yearly basis, they've assessed their needs and either kept it or given us a buy. This year happens to be a year they're bringing it back. Last year they gave us a buy, and that's how it's been since the inception of the Affordable Care Act. So we would expect to see it for this year. Unfortunately, we have to pass through those costs and pick those up, and then next year the hope is that that will go away.
So basically there's 2 components to the premium. It's the insurer fee as well as the normal fee. And so we had a discount on the MAPD for 2019, and that was because we did not have to pay that insurer fee. And then the reason we had the increase for 2020 is because we had to reinstate that insurer fee as part of the premium. Okay.
The rate increases on UHC, are those based on claims history
Yes, it is.
solely?
Yes. Okay. And then the final thing that I want to briefly discuss is our new provider for the Oklahoma City Care Clinic. We do have that The clinic is now operational as of February 5th. What's the last? February 5th is the date that we had it operational. So they are now accepting appointments as well as seeing our patients. Much is the same as our prior administrator, Care ATC. It's still completely confidential. There's no co-pays, no deductibles. One benefit now of Premise Health is that walk-ins are now accepted. The clinic does still offer full-service primary care. We are still stocking on-site generic prescriptions. One change moving forward is that we're going to try to phase out some of the over-the-counter items that were previously stocked, just simply because our employees as well as retirees can access those without a prescription at their local pharmacy, and those are relatively inexpensive. The other thing is we can do on-site lab draws through the clinic. The medical center is available to all retirees and their dependents who are covered under one of our medical plans. And so some of the services that the clinic is able to handle is they're able to do annual physicals, preventative exams. We also can do some chronic condition management. We can do screenings, lab draws, immunizations, acute and urgent care, women's health needs, as well as pediatric care for dependents age 2 and above. The hours of operation are from 7:30 to 4:30, Monday through Friday, and they are closed from noon to 1 for lunch. Up on the screen, we have the phone number for Premise, as well as they have an online app that you can schedule appointments. That is currently down, and they're working to get that back up. And so with that, that's the end of my presentation. If you have any questions, please let me know.
Jason, can you talk for just a second about what to do about if your medical records were with the previous provider?
Yes. If you have medical records through Care ATC, you can access those at no cost. You would just need to contact Care AC directly and make a request to get a copy of your your medical records. What I would probably recommend is getting the medical records sent directly to you. That way, if you want to share them, that way you have control as to who you give those medical records to, whether that's your primary care physician under your medical plan or if you need to give them to a specific specialist. You don't have to go back and forth each time to get those sent to directly to a provider.
Thanks, Francis. And is it reviewed and updated, and if so, how often?
We tried to duplicate the exact formula that we had in place from Care ATC, so I believe 100% of the drugs that we were prescribing with the prior vendor are now available with the new vendor. We review those on a quarterly basis with the new vendor, and so the doctor has the opportunity to come back and add or take away as needed depending on what the population looks like. We won't have that first meeting until a couple more months, though.
Good, thank you.
Jason, that contact information for getting your medical records, who do they contact? I heard you say Care ATC.
Yeah, they would contact Care ATC.
So the same number that they used to use?
Yes, it would be the same number that they would have called previously to schedule an appointment.
Okay, great.
Yes.
Right. I guess we need to do these individually, Francis.
Yeah.
All right, so thank you, Jason.
All right, thank you.
Christian. Item 6 was the first one for the HMO, the joint resolution. If I could get a motion.
Move it.
Motion second. Any discussion? All in favor, say aye.
Aye.
Any opposed? Motion carries. Item 7 is a joint resolution for Blue Cross and Blue Shield, along with Opebt, with the estimated cost of $33 million. Could I get a motion on that one?
Move it.
All in favor, any discussion? All in favor, say aye.
Aye.
Any opposed? Motion carries. Item 8, joint resolution authorizing the administrative services with Blue Cross and Blue Shield for post-employment. This one is for an estimated cost of $3.5 million. Can I get a motion for that one?
So moved.
Any discussion? All in favor say aye. Any opposed? Motion carries. Item 9 is a joint resolution authorizing the agreement between Oklahoma City Municipal Facilities Authority with Premise Health Employer Solutions on behalf of the City of Oklahoma City and the Post-Employment Benefits Trust. Got a motion from Ted, got a second from Neil. Any discussion? All in favor say aye.
Aye.
Any opposed? Motion carries. Thank you. Now item 10 is the acceptance of the interim financial statements for the 6 months ended December 31st, 2019. And Rhonda Shelton is here with us today.
All right, first I'd like to direct your attention to the bottom of page 6, the statement in plan net position. At December 31st, 2019, the trust reported a net position of $72.12 million. This is an increase of $16.97 million over the same period last year, where the net position was $55.15 million, and is primarily attributed to the $16.03 million market value increase in investments. Contributions remain stable at roughly $13.9 million, and benefits paid decreased approximately $2 million from $12.56 million in the prior year down to $10.46 million this year, due mainly to lower premiums offset by increased administrative fees. That's a direct result of the reimbursement to MFA for the Opebt proportionate share of the employee health clinic contract costs of $107,000. Now I would like to direct your attention to page 12. Midway down, under asset allocation guidelines, note that all investments are below the maximum allocation. When considering rounding, fixed income securities make up roughly 29.4% of the Opebt investments, leaving approximately 70.4% in equities, 0.2% in judgments, and 0.1% in cash equivalents. And that concludes my report for December 31st, 2019. Are there any questions I can answer regarding the financial statements?
Any questions? One thing I did want to point out, previous report that Doug had provided showed about a $68 million market value.
As of December.
As of December.
Right.
Mitchell pointed out to me earlier this morning that did not include a money market account that we have on hand, that we try to keep about a $3 to $4 million balance
Right.
on that. So when you see her numbers at $72 million and Doug's at 68, that difference is that money market account that's held within the city. So,
Right.
all right. Any questions? If not, I'd like to get a motion to accept the interim financial statements.
So moved.
Any discussion? All in favor say aye.
Aye.
Any opposed? Motion carries. Item 11 is to improve the external audit contract between the City of the Oklahoma City Post-Employment Trust and Allen Gibbs Hootlick, also known as AGH, audit firm for fiscal year 2019-2020. Move approval.
Second.
Second. Any discussion? All in favor say aye.
Aye.
Any opposed? Motion carries. Item 12 is to ratify the claims listing.
Move them.
Got a motion? Got a second? Second. Any discussion? All in favor say aye.
Aye.
Any opposed? Motion carries. Item 13, reports, comments from trustees. Have anything?
Chairman, if I can make a political remark, not the kind that you anticipate from me. While rates continue to increase annually, police officers have not had a cost of living increase from the state, the Police Pension Board, for 13 years. 13 years, the entire time of my retirement. There is legislation pending in front of the legislature which would give two bills, one a 2% and one a 4% increase, which would far from catch us up with the cost of health care increases over those times. I'd like to call that to the attention of the board, and any support that could be generated would be greatly appreciated. I speak for the uniform side. Neil, I don't know about your retirement position, and I'm not trying to exclude that, but that's the situation. A lot of my peers are hurting because of it.
All right. All right. Do we have any comments from staff? Are there other interested parties? I don't think we have any. All right. Seeing none, we are adjourned.